What do you do with those good people? And we back on the third topic, and we're just gonna continue where we left off. No introduction, you already know what's the deal was. So guys, the next topic is timing and time frames, right? Before we go to timing, I'm gonna start with time frames, right? Timing and time frames are very, very crucial. Like you could spot everything in the market, right? You could spot everything, your entries, trend and everything. But if you don't time your entries or your trades, you might as well, I mean, you can just wake up and decide to trade. So I'm gonna start with the time frames and then go to the timing aspects of it. So this is where a lot of people get confused, right? Because a lot of people like to do a top-down analysis, which is there's nothing wrong with the top-down analysis. I sometimes do it, but I always say if you don't align your time frames properly, you're gonna have problems. So I'm gonna help you align your time frames properly on this clip. Without further ado, let's get into it. So here's the thing. You need to have a higher time frame that you analyze on and the lower time frame that you enter on. You can't analyze on one time frame and enter the unless if you're some kind of magician. I don't know. And here's the thing with trading. I don't like saying you can't do that. Some people find ways with these things. I mean, it's an open, broad play walk field. You can literally do whatever you want as long as it works for you. That's what's important. As long as it works. But so far, here's what I've learned, and I've seen a lot of people implementing this, and it helps. And even me, I still do it till today. Instead of doing a whole top-down analysis, whereby you'll be going from a day, 4 hour, 1 hour, 30 minutes, 15 minutes, because you'll be overall confused. You'll find the day chart is saying we are trending. A 4 hour chart is saying I just broke structure to the downside. I'm going to the downside. And a 1 hour chart is like pushing upside, creating highs. And a 30-minute chart, you see now, you're like, which one should I actually follow? Because we're selling, buying, that side. It's like, especially if you start understanding pure price action. So this is how you always pair your time frame, right? If you're analyzing on a daily chart, right? If analyzing on a daily daily chart, your entry must be on a 4 hour chart. 4 hour chart, especially if you're a swing trader. But if you're analyzing on a 4 hour chart as your higher time frame, your entry must be on a 1 hour chart, right? And if you're analyzing on a 1 hour chart, right, your entry must be on a 15-minute chart, right? That's for intraday traders. And if you're analyzing on a 15-minute chart, your entry must be on a 1 minute or a 5 minute. This one is dependent on you, how you look at your confirmation. So me, I analyze on my 15, I enter on my 1 minute. So this is how um 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 you should go about looking at your trade. Uh, um, just labeling them for you. Higher. Supposed to be a G, right? G. Am I spelling right? Higher. How do you spell higher? Higher, higher. Yes, higher time frame. It's just that it's in capital letters. Maybe that's why it's confusing. But your higher time, your analyzation, and your entry part. So daily chart, 4 hour, 4 hour, one chart, 1 hour chart, 1 hour chart, 15 minutes, 15-minute chart, 1 minute or 15 minutes for entry. Right? So now that we know how to pair our time frames, these are your time frames, where to look at. So if you're a scalper and you're looking to enter trades at specific, just go your 15 minutes. Just sometimes me, I just do this. I switch off this, switch off the noise. I mean, I can look at them, but I switch off the noise, and then I just put two time frames. I'm scalping 15 minutes for my analysis, and then 1 minute. That's where I'll look for my entry, right? 15 for analysis. So if, for example, now this is an uptrend, ooh, this is like a clean kind of setup, but You see, we just broke structure here. And ooh, and look, we this candlestick broke structure, created this point, right? Like this is a live chart right now. Let's see some created this point right here, right? And when we created this point, who can tell me what they saw? We created a fair value gap, a fair value gap in which we reacted on. Right. And once we created this fair value, I'm going to remove the color so that you can see inside of it. Right. Fair value gap paired with a supply or demand zone. Right. And my entry, if you can see here, I'm just gonna zoom in so that you can see because this is a higher time frame for me. And then what you're gonna see is how we where are these tools now? Then we went back from the zone into our POI, point of interest. That's when now once I'm inside this zone, I'll look for my entry at the 1 minute. But I'm gonna explain the entries on another topic. So now it's time frame, right? So I'm just gonna just and we reacted from that zone, we started pushing to the upside. Uh without wasting further time, already done aligning off our time frames, right? And how to align them properly. So now we've done the time frames, we enter into timing. Timing is the crucial part of especially finding entries, guys, especially finding entries. I always tell people like timing is crucial. Very, very, very important. I have a student who, before they got into the session, because our mentorship is like kind of like intense, but it's very educative. He started to grasp a few things and he was starting to execute trading, and it worked for a while. But he was doing it every time. He'd call me a text, give me a text, send me a screenshot at 2 a.m. Like, look, I entered this time. I'm like, phew, 2 a.m. South African time, by the way. I'm like, look, I entered this trade, this trade. I'm like, okay, good for you. I don't like demotivating people, especially if they're practicing and they want to get an understanding. I like them to see, to see from the actions what transpires, whether good or bad. And he would just like randomly send me. I'm like, bro, how far are you? I like remember we discussed this last week on the Zoom session or whether it be one-on-one. Um, and we talk. I'm like, you need to understand, like the reason now you're losing, it's not that you're not making money. Because look, what you've learned, you made money here, you made money here, you made money here, and you made money there. But you trading like 5, 6 times a day. What's going on, bro? I mean, in the morning you made 200 rands or $200, but you end the day in a negative. And it's because you were trading a lot, plenty of times afterwards, after you make that $200, right? And which is a problem, right? Because you need to time your trades and also learn not to overtrade, which is going to be the last part, which is very, very, very important, which I'm going to teach, which is risk management. So timing, right? We have four sessions in the Forex market. We have the Asia session. We have the London session. For sure, some of you guys are like, no, it's three. No, it's four, trust me. And then we have the New York session. And then we have the New York PM session, which is the afternoon session, right? And I don't want to dive deep into this because my timing onto these sessions, it's based off a quarterly theory version, which I kind of broke down and understood and also break down in the mentorship. But I'll just give you the times. I know you guys have different times compared to the ones I'm going to give, but trust me, if you spend time looking at these times, you understand it even broader, right? So the Asia session starts from, and all these times are in EST, Eastern Standard Time, right? If you're watching this from South Africa, you need to convert your clock to New York time, the UTC -4 New York time, which is the one I'm showing here, right? But you can, if you like converting to, I don't like doing too much work, so my times are always in New York session. So you can change them to your country's time zone, the South African time and stuff like that. You can even go to Google and say, if it's 6 p.m. in New York, what time is it in South Africa? Simple, guys. Use these tools. Don't try to make your head burst by just trying to figure out all these things and just confuse Google or use ChatGPT or whatever AI is there. Just find ways to make things simpler. The simpler things are for you in trading, the quicker you grasp things and the better you become. Just simplify things. So without further ado, so Asia session is from 6 p.m. I'm just gonna write it in this form. 6 p.m. EST time. Remember, the time is not South African time, it's EST time. From 6 p.m. till 12 a.m. midnight, right? That's Asia session. London session is from 12 midnight, 12 midnight to 6, 6 a.m. 6 a.m. Right? Now we're in the AM, 6 a.m. That's the London session, right? And from 6 a.m., I know some of you will be like, but the New York session is starts at 8, blah, blah, blah. No, but if you understand things like the true open, like I said, I won't dive deep. I want to, I really want to. But if I was to do that, I'm going to create this very long thing which I have to deep dive into them. But for now, just utilize this, check those times. And like I said, if you want more details and want me to deep dive, I'm more than open for you to contact me on my socials, my contacts, or even reach out on the comment section and I'll contact you back or I'll reply in the comment section. And then from 6 a.m. to 12 p.m., we have your New York session, right? And then from 12 p.m. in the afternoon, this is all in New York time. So you have to convert it to South African times if you want to have the accurate timing. But just keep your, like I said, keep your clock on UTC -4, and then you'll just be easier to spot it for you. And then 12 p.m. till 6 p.m. That's your last session of the day, right? And then now I'm going to explain to you what happened now. Oh, I'm going to explain to you what each of these sessions do, right? So that it becomes easier for you to time the market. So the Asia session, what it does most of the time, it's either it starts by trending or consolidating, right? Remember, trending or consolidating. Trending doesn't matter. It could be on the upside or on the downside. It starts by trending or consolidating, right? Just remember that. Trending or consolidating, right? And then if, so now you see now trending on consolidate, it's if or. So if it starts by consolidating, we're gonna have what we call an AXAMD. Is it AX or AMXAD? Wait, let me double check. Let me double check. Like I always say, these things, me, wording confuses me, but I know how to use it. I know how to use because I don't focus too much on the vocab and the naming, but I know what comes afterwards. So if I check now, it'll just kick my mind into remembering. Let me quickly check on my notes. Mm, mm, just a moment. And don't be shy to doing these things. People like acting perfect on these platforms. Like, hey, I know what it means. I know it from the back of my head. Nope, I don't know it from my back, but I know how to break it down. So it's XAMD and I'm just gonna XAMD and I want the second one before I break it down. XAMD and accumulation, manipulation, distribution. Okay, it's accumulation, manipulation, distribution, and reversal. Accumulation, manipulation, distribution, and reversal. Okay, yeah, I've got it now. So if O, so pay attention to this. I was just finding the wording. So we have AM XAMD and AMDX. Is it AMDX? Accumulation, manipulation, distribution, and a reversal. Right? Yeah. So if now we start by consolidating, what does that mean? It means we accumulating. If we accumulate, the next point we're going to do is manipulate, right? Which is where we have our true open. So meaning London will manipulate and New York session will distribute, and then the New York session will either continue or reverse, right? And then if now we start with a trending market, it changes now. So if the market is trending, whether it be on a downside breaking structures to the down from in these time frames, utilize these time frames from six. I'm going to show you also now. If we're trending, it means now we're going to use the XAMD format, right? Meaning now, if we're trending, we're going to start by trending, and then London will accumulate, right? And then New York will manipulate, and then New York PM will distribute, right? So we have them like this, 2 points. Okay. Either we have AMDX or XAMD, right? And I'm gonna like this. Oh yeah, I have a way to simplify it. Might take a bit longer, but I'm gonna do it for you guys. I like simplifying things. Just bear with me. Bear with me. So we're just gonna have A M something um D X, right? I'm just gonna put them like that, right? And then go here on the side. I'm gonna break it down. I just want to put it in a format whereby it's gonna be easy for you guys to. I think this video, this might be the longest step we're gonna have, especially time frame X A M D, right? And then I'm gonna highlight like this how they all console. No, I just want. Mm, no, not the whole wording. Why are we changing the whole wording? So I can't change them individually. Ugh. Okay, I'm gonna do this then. Always find the solution. Highlight. So if we start with consolidating, even my spelling is wrong, consolidating. I don't pay too much attention to wording, guys, honestly. Consolidating. If we start by consolidating, it means we are accumulating. And these are the steps we're going to follow. Consolidating, we're going to follow this one. A, M, D, X. But if the market starts with trending, let's say we start by trending. I'm going to change the color to green. We start by trending. If the market at Asia between 6 p.m. and 12, if you start by trending, this is the steps we're gonna follow, right? These are the steps we're gonna follow, right? So this is like your key. If I want the no, not like that. The things I do to make sure you guys understand this. Okay. So if now, turn it upside down. Oh my goodness. Let me just use the brush. Sorry. If let's say if the market is trending, meaning between these time frames, right? Six and the market is either trending, it means it's breaking structure. As long as you see it breaking structure like this, whether it be to the upside or to the downside between these times, it's still breaking structures. The market is trending. But if between six and it's moving like this, you can't read the market. It's just too, we call this an accumulation point. Just know it's accumulating. So if it starts with these steps and you can see clean price action, it means it's trending, meaning this is what's going to happen on these upcoming sessions, right? But if you see movement you don't understand, it means this is what's going to happen on that upcoming session, because if it starts by consolidating around those times, I hope it makes sense. So if we start by trending, X means trending or reversal. So it means at London session, we're going to accumulate, New York, we're going to manipulate, and New York PM, we're going to distribute. So here's where we always look for trades. Always look for trades in the manipulation and distribution zones, not where we're accumulating on reversing, unless if you like trading reversals. Always look for trades in the manipulation and distribution zones. That's where you find proper entries, where the market is manipulating, and after that, spotting that manipulation, you can enter your trade based on, obviously, remember price action, remember POI. We talked about this. Depending on how you've analyzed, if you're in an uptrend, you're waiting for price to come back to your fair value gap or your supply zone, and then you just look the first phase, what happened. So let's um, get to a practical example. I want to use now's analogy. So how I'd mark it is I'd put lines like this. So from what day is it? Tuesday, right? So I want to see my time from 6. You see, if you look here, the time is 6. So I place my first line, 6 till 12 must tell me 6 till midnight. So what do you see in this area? What do you spot in this area? The market is not trending, it's just moving sideways. What does that mean? Let's go back. Let's go back to the thingy. What does that mean if we're moving sideways? What does it mean? We are consolidating, guys. We are consolidating. If we're moving sideways, we are consolidating. And which step are we following? We're going to follow the AMDX, accumulation, manipulation, distribution, and reversal. And we want to trade between the manipulation and distribution, right? So now that we spotted our first part, now I'm timing my market. I know, okay, no, Asia consolidated. So I'm looking to trade the manipulation phase and the distribution, because after that, it's manipulation, right? And then now from 12 till 6, it's London session. And in London session is the second phase of our AMTX, and which is manipulation. This is where I'm looking to trade. And like I said, what happened here? We broke and then we came back into the zone. This is like the live market. And from this zone, this is our PI of a fair value gap. I would have moved to my 1 minute and got my confirmation, and I would have traded this buy. All right. It's as simple as that. And then what are we to expect on the from 6 till 12 once you enter the New York session? Now that we know, and literally once you understand the AMXD and XAMT format of timing, bro, your life will change, because you'll start knowing what's going to happen with each phase of the market. So now that we know that this was the manipulation phase, we know that this is going to be the distribution phase. So we can also look for other trades in the zone. Distribution can be in a format of, after this was manipulating, we push down and then we distribute to the downside, or it could just be a continuation. So these are the phases we trade in. And obviously the last phase will be the reversal, right? So let's utilize one last example. Maybe let's say previous day's data. Let's say yesterday, because this is today's data. So I'm just gonna move these lines to yesterday. I'm gonna do them all at once so that I don't have to draw them. Like I said, this video, I think, is gonna be the longest of them all. No, 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 no. And I'm gonna delete today's, 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 today's. Then we're gonna focus on what happened yesterday. This is for breaking down purposes and explaining. Look here. What happened yesterday? Yesterday it was a Monday, and when the market opened in a gap. And what happened? We started pushing like to the upwards, right? For me, it's we're not moving sideways, but we're not moving sideways, but we it kind of like in a trending format because we did break structure to the downside, right? And then we came and we had some minor movements then we broke structure here. So meaning we are not even. I think we are accumulating here because we're not breaking structure. Because in this phase alone, we want to see those break off structures, like a structure being broke for us to confirm a trend. Otherwise, if we're not breaking any structure, we're accumulating. True. So this is an accumulation phase. So already I know that yesterday we accumulated in the zone, meaning where will I be looking for my trade? In the London session and the New York PM session, right? If we start by trending, we know our trades will only look them at the New York session and the New York PM. Not every session is to be traded, especially the London. But now because we started by accumulating, we're going to be looking for trades here and here. And if you could see, here we started breaking structure. So I would not look for a trade really here because there's not much going on. Even the movement is minor. So I'll gauge on the distribution phase. And look what happened on the distribution phase. Distribution phase, as soon as we manipulated, this was a manipulation, right? And the manipulation also falls from a range that came from the manipulation phase, right? And as soon as we manipulated, we broke structure to the upside. And once we broke structure to the upside, what did we have? What do you have? Fair value gaps. Fair value gaps. And some of them, remember, not every fair value gap will be traded into, right? Not every. And we pushed up because we didn't come back to this one, didn't come back to this one. I'm just gonna stay out of the market. And this is a trade I actually took yesterday. Those who saw, then boom, another fair value gap. And what happened? We came into the zone. 1 minute for confirmation, and we would have gotten our confirmation and would have bought the market, right? Simple as that. So timing is very important, guys. Go back test these things by yourself, right? I want you to go back test these things by yourself. I don't want you to take my word for it, especially learning how to time. These are the times you should look for, and I told you how to spot and look out for them. And once you've mastered them, and if you still don't understand them, I'm gonna drop a video, I think a solo video. And if you want a breakdown video, let me know in the comment section. I'll drop a solo video, a long video explaining timing and time frames only, right? Timing and time frames only that you could utilize. But without further ado, we can jump into the next topics, which is going to be the entries. I'll see you in the next session, guys. Sharp, sharp.